Hello and welcome to another episode of On the Waterfront, sponsored by Waterfront Logistics. I'm Weston LaBar, your host, and here with me today is Dan Walsh, President and CEO of Track Intermodal. How are you doing today, Dan?
Hey, good. Thanks, Weston. Nice to see you.
It's great to see you as well. I'm really happy you came on. There's a lot of great topics, especially as it relates to equipment. We can't do what we do without providers like you getting us the right equipment in the right place at the right time. But maybe for those who aren't aware of Track Intermodal or you, Dan, give us a little bit of who Track Intermodal is and what you do, and then also your background in the industry because you have quite a fascinating one.
Yeah, sure. So, first of all, thanks very much for the chance to be here. It's always nice to catch up and appreciate the chance, to talk it over. So, Truck Intermodal is the largest provider of marine and specialty chassis in North America. We have in the order of 190,000 units nationwide. We operate on every port and on every rail terminal across the country. Track has been in business for over 50 years and has always been the market leader in that space. We have a domestic business. We used to have the largest pool on the domestic side. We sold that in 2018. We re-entered that market in 2021, 22, that timeframe, and we continue to build that out. So that's going well for us. But yeah, Track is a stalwart of the intermodal space, and lots of great people who've invested lots of time in the industry, really deep knowledge, long relationships with our customers and our vendors. In many cases, over 40 years. In some cases, up to 50 years. So really deep relationships with the industry. We believe in the industry. We're committed to it, and it's a lot of fun to be part of such a great company. In terms of my own journey, obviously you can tell from the accent, I'm from the deep south. I'm from Sydney, Australia. I made my way to the United States via, obviously Australia, where I worked for I worked for Shell in the mining industry for a while, and then for a large Australian multinational called Brambles, which has quite an unusual footprint in the sense that most of its revenue and profit is generated in Europe and the United States, despite it being an Australian headquartered and listed company. I worked with them for a while. Then I worked with them in London, where I was there for 8 years, and came to the States in September of 2010. Ended up running one of their North American divisions for a period of time. I left there, went to XPO Logistics. So, had a great run at XPO. Was the president of their final mile business, which is the largest provider of big and bulky, a deliverer of big and bulky products into the home, nationwide in the United States. At the time, XPO Logistics was the biggest logistics company in North America, and then left to join Track in July of 2020, coming on board in August of 2020, and been there ever since. So I've had a fantastic run. I really benefited greatly from our industry. Had the chance to meet a lot of great people, work around the place, and see some different countries and cultures, and pretty well established here in the States now.
Yeah, and it's been fantastic. It's always great working with folks like yourself or folks like Val who work for you who have a background in trucking, right? Because as such a big consumer of your product, truckers are unique people. We have unique needs, and it's always great when folks have been part of that and understand being on our side of the equation as to what it takes to run a logistics company. Because as you know, our industry in general, we're essential, but we operate on the thinnest of margins, and we're also codependent on one another. It's important that we have at least an understanding of how our vendors, how our customers, and how our colleagues in the industry operate and what's important to them. So I think that's been definitely one of the delights of working with you and members of your team is you get it from the trucker's perspective. When I first started working with the chassis providers as the CEO of the Harbor Trucking Association, it was always a struggle to get both the trucker to understand the pool, the chassis, leasing provider and the pool operator's perspective, and then also for getting certain folks to understand our perspective. I think we've come a long way, and that leads us, where are we as a chassis industry today? Because the last decade has been very interesting. When I started, we still had a lot of ocean carrier provided chassis. That we didn't have the pool of pools yet here in Southern California. In fact, gray pools and interoperable pools were not a thing yet. And then you fast forward to today, you have a lot of different chassis models. You have first of all, containers aren't primarily wheeled anymore, so that's led to many of the ocean carriers drawing back, maybe not getting out, but drawing back from the market. You've seen the creation of all different types of pool operations, and then the concept of trucker-owned wheels, which has been the predominant model throughout the world outside of the United States, meaning the trucker provides the chassis; it's part of his service. That's seen an uptick in many markets as well. So I threw just a lot at you, but it's funny because a lot of this has really evolved in a short amount of time. So where are we sitting today, and what are you looking at as the CEO of Track to say this is where we are today, but this is also maybe where we're going, and we need to be prepared to go.
Yeah, I mean, I think that your assessment is right there. I mean, it's been a tumultuous period, certainly since I've been here, and I think your point about a knowledge of transportation is very well made. You know, I've been around transportation my entire career, and obviously as part of XPO, and working last mile, we had like 9,000 trucks on the road at any one time, and that was our business. And at Track, most of our customers, I mean, we have 6,000 customers. If you look at them by number of customers, the majority are truckers. I mean, obviously the steamship lines and the BCOs have the ability to pull demand towards our business, but the people that utilise our product most regularly are truckers themselves. So it's critical that we have an understanding of that industry, and that was one of the reasons why when I was thinking about joining Track, I decided to do so because I thought I had a good understanding of the customer base as well. And the other thing I'll say is that Track, had very positive feedback from all of its customers on the steamship line side, but also on the trucker side. That doesn't mean we're perfect by any stretch of the imagination, but certainly recognised as industry participants, good people focused on service and execution who provide a safe and reliable product, and they've been rewarded with market leadership on the back of it. In terms of the chassis market itself, you make the point about change, and again, I think it's a prescient insight. So if you think about the period pre-COVID, if you like, which predates my time, pre 2020, pre 2019, that sort of time frame. Basically everything was about pooling. There's a little bit of term lease, but everything was about pooling. The steamship lines that owned the chassis, they got out of it. They decided that it wasn't for them. Private money stepped in, bought the units, and then came up with the arrangements to provide the units to the market, usually through the pools. A pool, obviously, being an amalgamation of units from various contributors, which people then take and pay as they use, if you like. And there were all sorts of different pooling models that existed around the nation. We run 13 pools; they're all different, and that's one of the things I think which is unique about our industry is the complexity, the difference in each of the operations. And then as over time, people wanted to control their own destiny, particularly on the trucking side, and we're thinking about how do I get hold of these assets so that I don't have to utilise the pools, but I always have them available to me, and that and I can use them in the manner that I see fit. And there's two choices. There's one is buy, and the other one is lease. Buying is not such an attractive option because it's a heavy capital outlay on something which some would argue is non-core, but leasing, was attractive. And I think COVID accelerated that. What we saw in that period post-COVID, when the surge came and there was very intense volumes, 21, 22, was a material growth of the term lease business where people were leasing units from us because they wanted to have more control over the assets, the type of assets they had, how long they had them for, the number, and the cost associated with such some certainty. And we're happy to support that. We're in the business of saying yes to our customers. So that business has grown, and the pool business has, I'll say, shrunk would be the wrong word, but there's kind of less pool demand than you've seen in prior years, although there's still significant demand, and at the same time there's been a material increase on the term lease side. So if you like, that's a structural dynamic of the market that's changed. The other thing was that just before we went into COVID, the Department of Commerce, introduced um, 250% levies on chassis that were manufactured in China, where 99% of the world's chassis were made, effectively taking them off the board, and that's tariffs and countervailing duties. I'm totaling them up. It was 225 plus 25. And so basically at that time, what it meant was the market was capacity constrained at the time when there was a massive pull on the units. The free market being what it is, people moved into that space and created alternatives. Both domestic manufacturers and non-Chinese manufacturers. And because there was a lot of demand, a lot of people bought chassis, to provide them to the market. And then when that demand dissipated somewhat post COVID, in some cases the market was oversupplied. So where it had been capacity constrained, then went to being, oversupplied in a very short period of time. And that's taken a little bit of time for things to even out. We're starting to see some signs that that's basically leveling out to a point which is more or less acceptable, steady state type period. But there was a hard reset after that volume surge where you had a lot of capacity in the market and not as much demand, as that capacity had been sourced to provide. So that put pressure on operating costs. People need to make sure that they're on top of their their margins and so forth, so that they could maintain profitable businesses, viable businesses going forward. And like a lot of people in our industry, truckers, steamship lines, it was at one moment everything was going great, and then the next minute, there were some really material challenges, and you had to adjust very quickly if you hadn't foreseen some of that coming. So, I think that's where we found ourselves, and now I think, with the tariffs coming in under President Trump's administration. By the way, they came in under his first administration. They were never removed. The President Biden left them in place. As everyone's aware, there've been significant adjustments since then. That manifested itself in a number of ways, on the cost per unit, but also on just overall volume, and particularly in the second quarter, that was quite challenging. There wasn't as much volume as people had expected after a pretty strong first quarter. That seems to be leveling out, but it's made forecasting difficult. So, and then it's made capital investment difficult because forecasting's been difficult. So, just when we thought we were heading into some smoother seas, we came into another choppy period, and that's brought its own challenges. So, at the moment, I would say there are a lot of chassis around. There's still a fair bit of uncertainty about volume, which makes it difficult to forecast. But things are starting to settle down a bit from a very bumpy second quarter, to the point where we can see a smoother path going forward.
Yeah, I mean, physically, you can see it in the sense of you can tell when the industry is struggling because there's chassis stacked up at yards all over around ports and intermodal facilities. I don't see them stacked quite to the degree that we did maybe 4 months ago, even. So that part I think is visually obvious for those of us who are in and around it every single day. But you talked about some things, and I think you coming into the industry and taking over the role at Track was at a very unique time because it was almost a line of demarcation in a lot of these transitions that we're seeing, right? And as you talked about it, I'll say pre Dan Walsh, right? In the industry, the evolution was really about you had these wheeled operations, and because of vessel size and density, you started to see the grounding of containers, which ultimately led to the pooling operations, right? Because no longer did you have a single steamship line coming into a terminal where they might have an agreement with a company like Track. There might be three or four steamship lines on one of their ships, and they might all have a different agreement with a different intermodal equipment provider, and that created its own degree of instance. The industry, you guys with two of your major, co-opetition, if you will, competitors in the industry, DCLI and FlexiVan came in and created the first of its kind pool of pools. And we'll get a little bit into that later, but
Yeah,
then
sure.
also going into the pandemic, we saw a few things, right? We saw um, we saw that transition to trucker-owned wheels, partially because they were being used again warehouse on wheels. So there was this proliferation of need of chassis that was coupled with the tariffs and countervailing duties on the chassis coming from China, which was probably 60,000 plus units a year that were coming into the market. So that has changed the way you source equipment. In some cases, you've got folks that have invested in or bought intermodal equipment manufacturing companies. Other folks have created what I would say are the next best, the next closest thing, which is you've created these sort of priority arrangements with manufacturers to be at the front of the line. There was a change in the manufacturing of equipment in the sense of we got a lot more standardized equipment because of that warehousing effect we discussed. I bring these up to say if we have lessons learned from COVID, I think there were some things that came out of it that were very positive for the
Yeah.
industry, including you as the chassis providers. But then also there were some things that were still feeling the lagging effect. Again, lead time for specialty equipment. The dislocation of equipment in certain markets based on volumes coming in. Can you talk a little bit about your role as to the last 5 years and how you've had to navigate sort of the lagging effects of COVID, both positively, like what are one or two of the things that you think are great that came out of it, but also what are some of the things that have really been sticky for you guys to have to figure out?
Yeah, sure. So, I mean, I think that the first thing I'd say about the post-COVID period was I actually thought, and I may be in a minority in this country, but I actually thought the people working in the supply chain did an unbelievable job. Certainly, it creaked and strained, but it never stopped and it never broke, and things kept going. And you were talking about volumes in excess of 35 to 40% above what is normal, with no warning. In a very compressed period of time that extended for multiple years, and I think people did a great job handling that. To be honest, so I think we learned more about our capacity, and we were collaborative. I mean, we compete very, very hard, always in all segments of our industry. But I think that there was a general awareness that if we had the space to work, that we could get our way through this and fix the problem, and that's what we were able to do. So I think the industry learned more about its capabilities, about its ability to handle such an event on such a scale and make it through. And so that I think was a good thing. I think the other thing was that um, customers like had greater clarity about what they were looking for. We want to do this, we want to do it this way. This is how we want things to be established. We'd like your support to do it. And as I said earlier, we're in the business of saying yes to our customers. And so that required us to think a little differently about some things, but there was some really effective collaboration between our customers and ourselves about how we're going to bring our product to market to support their growth. And we've been rewarded by that, by retaining the vast majority of all our business that's gone out there. In fact, our retention rates are higher than they've ever been. And but they don't look, the deals don't look the same as they did, pre-COVID. There's some differences to them. People want things a different way. So I think that we learned about our agility, so we learned about absorption in the first case, about being able to take a big hit like a black swan event, and then agility, the ability to move fast into new space with your customers and help them make money while you're making money, so that you can win in a competitive environment. So I think that was good. On the bad side, or on the suboptimal side, nothing's ever really bad. In terms of our business, no one's ever really complaining. But I think in terms of on the suboptimal side, um, I still think that some of the legacy problems that have been around our industry haven't been solved. The utilization of data to make sure that equipment is in the right place at the right time. I with all love and respect, I don't think we're particularly effective at that. I think that we still see a lot of the data that's in the supply chain as being proprietary when it isn't. And it should be. We should be much more willing to make information available so that people can, on the service side, which is what we are, can provide the assets in the right place at the right time. And also, I think for all the innovation, for all the creativity, for all the willingness to try new things and think about new things, people still stuck to some principles which I think are completely outdated, and based on historical or legacy setups which are no longer relevant, and that manifests itself in a number of ways. I mean, one of the things I would say, Weston, is I think that we had to deal with a lot of regulatory scrutiny, um, where people were asking us questions about matters that the free market had already solved. And as an industry, we spent a ton of time in these non-value added conversations talking about historical factors which the market had addressed. And you mentioned pool of pools. Um, and I think that's a relevant example. There are a lot of discussions about choice, a lot of discussions about availability. Well, there is choice and there is availability, but maybe now it's the pool of pools is going to take a different shape going forward. I think it's well known that of the three participants, one has exited the pool of pools, and a variation of that is continuing with us and another competitor. Um, but how long that lasts, I don't know, or how long it lasts in its current form, at least, I don't know. And the pool of pools got a lot of static, but it's worth remembering what it was put in place to do, and that was to improve fluidity, across the ports and enable people to pick up and drop off a unit at any one of 13 terminals across the LA Long Beach complex. And for 10 years, it worked. It didn't work perfectly, but it worked. Well,
It was
um,
better than the alternative. I think
yeah,
is the big thing, and utopia is not built overnight. In fact, it's you never quite get there. It's a constant evolution to trying to have a product market fit based on that day's demand, and it's ever changing, right? But I think to your point, how much worse could some of these issues have been if there was not an interoperable gray pool like the pool of pools, as opposed
yeah,
to what it was meant to do and what it did solve in its moment in time.
yeah, I think, like, to be honest with you, our preferred model is the off-terminal neutral pool. Where you could just you set up like looks like it exists in other markets. New York and New Jersey is obviously a great example where you pick your chassis provider, you drive in there, you get a chassis, you go get what you want, and then that's how you do it. It lets us control our assets, lets us control our quality, and lets us service our customers. The problem with grey pools, and it's a big one, is you can't service your customers. Like, you could do everything right, but if someone else doesn't, then the customer experience suffers, and that makes them unappealing for us. And they're also expensive, because it's hard to maintain the quality of the asset at the level that you need it to do at the scale that's needed. But when you're in control of your own fleet with your own hands on it, you can do that. So I think that the pool of pools was, if you like, a creative solution for a particular issue. Um, but it turns out maybe it won't stand the test of time. The neutral pools tend to. The ones that were put in place are still in place and will always be in place. So I think that that's probably the way it's going to go.
Yeah, and quickly, before I hop into the next question, could you just, at a high level, describe the different types of pools you guys participate in today? I think that's people know the difference between a pool model and a trucker-owned wheels model, and the different very stratified types of models. But to your point, there's you have 13 pools and they're all slightly different, right?
They're
So
all different. Yeah.
at a very high level, can you just talk about the difference between some of the pools, and we don't even need to get into the like that deep, but just for high level so our customers understand what you're talking about, or for our listeners.
Yeah. Yeah. I think so. When I talk about a neutral pool, what I mean basically is off terminal locations. So, for example, there's a track. So, there's a track yard, and there's a DCLI yard and a FlexiVan yard. Let's keep it simple. They're all on the same road. You want a track chassis, or you have a deal with a steamship line where you need a track chassis. You drive into the track yard, you get your chassis, you go in, you get your box, you drive away. That's the end of it. Right. So that's what I mean by a neutral
Hmm.
pool. It's similar to like any sort of store, in a chain, right? And that's what operates, across the nation. If you talk about a grey pool, it'd be like going, like everyone chucks them all in together, and you say, okay, there's 100 chassis in there, and that should be enough to service the volume. But what if the volume requirement is actually 110? It'd be like you renting a car when you're going to an airport and just being given a grey key, and instead of getting to choose a Hertz or a National or a Avis or whoever like, you turn up and hopefully there's a car there. But if you've paid for the premium quality National one, but then you get there and there's not one, then you've got no choice but to use what's in front of you. And that's why customers don't like great pools. That's why they don't like them, because they can't get the service. Now, in certain cases, that's what people like. So, we do them. We also run private pools, where customers will say, like, look, I want my own pool of chassis, on a particular location to use for that volume in that market. So we do that for our steamship line
I
customers.
was going to say, for example, you see that with steamship lines. You also have seen it become more prevalent with BCOs, where they may have a big BCO retailer may have 10 or 15 truckers in a market because of their volume, and they'll say, "We have got to deal with track. Here's where you go and pick it up, and it's you can use it as long as you're hauling our freight, right?" So that's been the new
Yeah.
sort of the newer version of the private pool.
Yeah, and we also have like what we call the geo fleet, which is where where we have uh, tagged units where they're all technologically enabled, and what we're able to do is set up a GFN, so you can give a customer a certain number of chassis and say they stay on your location. Let's say it's 500 chassis, but you only pay when they go outside, when they break the GFNs. So you pay for 50% of the 500, let's say, every day. But the balance you only get charged when you actually use them, and that's something which is proving quite popular for customers that have space. They're like, yeah, sure, we'll take those units, and we'll pay a base rate to guarantee a certain level, but we've got a surplus pool there that we can access if we need it, but we understand that we only pay on a per utilization basis. And that's big for us because we're massive into technology, and to use technology like that to innovate around a service offer and get that out in the market. That product offering has been very well received by our customers, growing quickly, and so that's another thing. So I guess, Weston, the best way to think about it is um, within reasonable parameters. If people come up with ideas, we work through it to try and get to the point where it's operationally viable, and then we can set it up. But really, the big pools, our preferred model is the off terminal grounded locations and neutral pools. They're the ones that work the best. They're the most durable, and they let us provide the best service to our customers, and that's what we're in the business of doing.
Yeah, no, I appreciate that, Dan, and I wanted you to talk about this a little bit because I feel like it sets up for this next question. Because I think if you talked about a little bit the scrutiny from a regulatory perspective and meeting customer demand, and at the end of the day, you have a business to run at the same time, and sometimes these things are in conflict, right? And so,
Yeah,
can you talk a little bit, because in my opinion, you've got one of the tough jobs, in the sense that in some instances, people look at you as a public service out there. You're trying to be a high value service provider. And at the same time, depending on the market and the time frame, people want to price you like a interchangeable commodity. And because of that, and we know it well because we're truckers, we're in the same exact business to a certain extent,
exactly.
right? But these things are often in conflict of one another when you're trying to make business decisions. And just as Dan Walsh and leading track, you talk about the uniqueness of that, because I don't know of too many industries in the world where you're looked at as, if you've got too much on a terminal, you got to get it off the terminal. You're taking up our space. If you don't have enough in the pool, you're not doing your job because the America's importers and exporters don't have equipment available. And then at the same time, you need to have the best, most roadworthy, most technologically advanced equipment at the price of a shoelace. And so, you know, can you talk a little bit about the challenge that comes with that? Because I think that's why you don't see a lot of big equipment providers. You've seen definitely new entrants in the market with the pandemic, but it's tough if you want to get outside of being just a term leasing company, because all of a sudden you open yourself to all of this new scrutiny, both regulatorily and commercially, through no fault of your own.
Yeah, I mean, so we occupy a unique place in the supply chain, but But I don't think that to be fully transparent now, I don't think our lot is any harder than anyone else's. I think that at the end of the day, um, and this is how I think about it anyway, just to be completely transparent. So when the steamship lines got rid of the chassis, and said they didn't want to do it anymore, private money stepped in and acquired the assets and provided the service. And you're quite right when you say that that's a significant investment. I mean, you're talking about multiple billion. The track fleet's worth multiple billions of dollars. And that makes it difficult for people to compete with us at scale. They compete with us in a market here or there, but if you want to be a national provider, you have to stump up a lot of money to actually secure the assets, and then you get to see us in the market, and that may not always turn out the way you want it to. So that's one of the things that actually we like about the business is there's significant barriers to entry. But in my mind, it's very simple, and I've said this a number of times publicly, so I've no problem saying it here. We are a capitalist undertaking. Track Intermodal exists to make money, and if there is no business case, there will be no investment. And that's what people need to understand. And I think that the assumption that it would always continue, that it'd be fine, that people would still continue to put money into it, that's a mistake to think like that. That just won't happen. So whilst there's an operating environment where an appropriate return can be secured, then capital will continue to flow. But in the event that that is not the case, then there will be no investment. Because, look, we're owned by a private equity company, and Stone Peak Infrastructure Partners, they're fantastic. They're great. They're highly supportive. But every time I want capital, I have to compete against their 62 other portfolio companies. And if there's, a chance to make more over there, then guess where the money's going to go? So, I think that um, we occupy a unique place in the supply chain. We provide a high quality service. We've invested a lot of money to be able to provide that service, and we will secure an appropriate return for our investors, um, because that's what we're charged to do, and that's what's necessary to do. And in an environment where it becomes just too hard or too difficult or too restrictive, then there won't be any investment.
Yeah, there's this old saying that capital flees from risk and goes towards opportunity, right? And at the end of the day, I don't know too many private investors that are looking for tax write-offs to balance their portfolio, right? They want an ROI, and I make the same argument in trucking, right? If you want a
Yeah.
healthy vendor as a transportation partner, you need to understand that you can't pay a rate lower than their cost. Like
No,
it's not
completely
about
right.
being greedy. It's about being healthy. And I think that that's the part that everybody needs to understand is that we are in a climate right now where everything's more expensive than it used to be. And all I can say on the trucking side is, I spoke with somebody yesterday who's been in the industry. I've been saying that we have the same rates, that we had 10 years ago, except they haven't been adjusted for inflation. I had somebody said some of the rates that they're seeing are the same as when he started in the industry in the late 90s. And one of the things we joke about is some people want us to move containers with a truck cheaper than what it is to Uber from the port to that location. So I think that we all need to understand that efficiency is key if we want to drive down cost, but at the end of the
Yeah,
day, we
sure.
all have to be healthy.
No, I completely agree. And like we accept the cost challenge. As I said, no one's complaining here about our lot. We understand that in a softer demand environment, or an environment of geopolitical uncertainty or whatever, tariffs, whatever you like, that there's going to be pressure on costs. We all understand that as operators in our industries. I think some of the best cost operators in any industry exist in ours, because they've
Mhm.
had to become so proficient at it. But it's a false economy to expect truckers, for example, to do it for nothing. Because they're just not going to eventually. And that will be a bigger problem. And you can say, well, the free market will solve it, and there's all these innovation, but that will take time. And that is not and it's questionable. So some of the technology that's being talked about has been very slow to emerge. In the meantime, you need a healthy, vibrant transportation sector, like you need a healthy, vibrant intermodal sector, steamship line, maritime industry, railway industry. All the participants need to be able to secure an appropriate return. Otherwise, the capital just won't be there to support the growth that's needed to stimulate the ongoing development of the economy, which is what we're all heavily invested in for ourselves and for our families and for the people that we care about. So, in my mind, it's actually pretty simple, Weston. Like you can, and there's loads of times when you can feel like it isn't, but when you're in a job like mine or a job like yours, at some point you have what alcoholics refer to as a moment of clarity and say, look, if we can't make any money, we're not going to do it.
Exactly. No, like I said,
Yeah.
it's something we all in this industry, no matter what level we're at, what vertical we're in, what part of the ecosystem we play, we deal with it. Is this worth doing right now? Is the juice worth the squeeze? So
Let me ask you a question,
for
Weston.
sure.
Like, do you think that that's more? Do you think people are more willing to say that now than they have been in the past? If
I
there's
I think what has happened is that you've seen some major bankruptcies come into play. The cost to serve is so much higher. A lot of it's driven by regulatory things, environmental factors, labor factors. In your industry, it's about safety factors and cost to build equipment, right? So there's all these different financial pressures that have increased the cost. I think as an industry, we continue to get better as best we can with technology and other things. But these all come at an additional cost administratively. And I think what's happened is you see your colleagues go out of business, and at a certain point in time, you just say, I'd rather have smart growth and I'd rather have less revenue than try to be the biggest dog in the pound and not be able to survive right until the end of the week. And that's really, I think, what people have to look at. I think during the pandemic, one of the things that's complicated it is it's not so much private equity, right? I think private equity buys assets and then does its best to try to make it work at the most cost efficient manner, right? You can talk about, does that mean certain businesses lose their secret sauce and this, that, and the other thing? Like, hey, if you buy a brewery and you change the beer recipe and use cheaper ingredients, it's probably going to taste a little bit different, but that doesn't mean that from the investor's perspective, it hasn't become a better business, right? Maybe still enough people are buying it and you're making a little bit of a margin. I bring that up because these are the things we all deal with, but it's the startups and the venture capital that have the money to operate at a loss that I think have also compounded it. And I think what you're
right,
finding out is that the traditional players, listen, you can't move something without a truck. You can't move a container without a
yeah,
chassis. You can't move them without a driver. And so everybody's got to be fairly compensated and made whole. What I would say is that as the industry has sort of removed itself from the pedestal of being the darling of venture capital that it was during the pandemic. The hope is that some of these things stabilize because at the end of the day, as an industry, if we all understand we have a cost to serve before we can provide a rate, and we're not going to lose money every time we do something, then we'll all be healthier. But if we're going to, be okay losing money every day, whether it's because of market share desire or private capital wanting to just increase top line revenue. The issue that we're going to have is it's going to be a race to the bottom, and it's going to change the dynamics of an industry that provides a lot of optionality and a lot of different service offerings. And I still say this is such a relationship driven industry. It's the type of industry where people try to have a secret sauce for something that all looks the same to the outsider's perspective. You're just going to end up with a few big companies that all do everything exactly the same, and it's akin to what regulation was pre 1980, right? You're not going to have options, and that's going to drive costs up in general. So, I think
yeah,
the industry as a whole is starting to get there. I think it's again fueled by the sheer number of big bankruptcies from companies you would have never thought would be going out of business, and there's always going to be disruptors, but at the end of the day, we as an industry can set what that line of demarcation is going to be. We can set the floor of what we're willing to do and not willing to do without any sort of collusion. And it's called, I'm not going to lose money every single day. And if
yeah,
and if we approach it that way, and we're all following the same rules and regulations, we should all have very similar costs to serve. It's really going to be about what companies do people want to work with because of service levels and people and unique offerings. And that's where we want to get to as an industry. At least the entire time I've been here, that's been the utopian state of have people value for what you provide them, not for what somebody else charges down the street.
Yeah, and I think that like as I mentioned earlier, this is a very competitive industry. And certainly it is in. I know it is in transportation, and I can absolutely assure you it is in the chassis side as well. Competition is fierce, as it should be. It makes us better, and we don't have a problem with that. And you've got to be able to take that challenge, to optimize your operating efficiencies so that you can provide, a compelling value proposition for customers, and just accept that that's the nature of business, and that challenge never ends. And as I said, I think that I'm really proud of the track team. I'm proud of them every day, but how hard they work on that side of things. And because we have to, and it makes us better, and it's part of our, as you say, it's part of our secret sauce. I'm sure if you asked our competitors, they'd say the same thing about themselves. But yeah, we compete hard in our space in the industry, and that's a good thing. It's good for our customers, it's good for the economy, and it's good for us because it makes us better.
Yeah, and if you guys all operated exactly the same, your customers would be upset that they didn't have the choice to have differentiating factors between providers.
Yeah,
I have one last question for you, Dan, because we're getting towards the end, and you're a busy guy. I'm not going to keep you past what I promised, but
sure.
get the crystal ball out, right? We've talked about a lot of the changes. You talked about one of the major participants in the pool of pools pulling out. You've had the debates around chassis choice and other things at the federal level. From your perspective, where do you see the industry heading? And obviously, it's going to be disrupted and impacted by decisions made by people in much higher positions than either of us hold from a government perspective, right? But where do you see the industry going? And maybe more importantly, where does track see the industry going, and where do you think it needs to go to be healthy?
Yeah, I mean, we feel really good about our position in this industry. We see, um, like, multiple avenues of growth, and we're experiencing those at the moment to varying degrees. I mean, there's tangential, um, areas that we can expand into, which we've done well. We can innovate around the product offering, which we've done well. We There's always the opportunity to consolidate. There's mergers and acquisition potential that's out there, um, and also I think that I do really think that there will be a period where capacity will exit the market and things will get back to a more steady state. So we feel really good about the future. We believe that GDP is up and to the right, and there's a strong correlation between growth in GDP and growth in chassis companies and demand for chassis, demand for containers. That's been proven over an extended period of time. So we feel very, very strongly about the growth potential of our business. We have a fantastic sponsor, as I've said, who is willing to invest. We continue to invest massively in our fleet, to support the operations. I just think now it's a period where it's a little opaque, and people perhaps holding back, on the investments a little bit until there's a little more clarity. But the desire to invest is still there because the belief in the growth potential of the business is unchanged. And so, for us, I think, the future is bright. That's all I would say. And, we feel really, really good about our company and where we're going. And has everything been perfect? No. Have there been some moments where we had some extraordinary tailwinds? Yeah. And so if I look back at it, I feel like overall we're in a pretty good position. We've got great people, great customers, a really strong product, fantastic market position, enviable market position, and lots of potential. So we feel really strongly about where we are at the moment and about our industry.
Yeah, Dan, I really appreciate you for taking time out of your busy schedule to come join us here on the Waterfront, sponsored by Waterfront Logistics. Um, if people need to reach out to you or folks from Track, they can visit your website, they can visit your social media pages. I just want to thank you again for taking time for coming out. And, again, we'll continue to monitor the situation. We'll continue to see how things evolve. We'll continue to work together and collaborate on a better future for all of us. But with that, I'm Weston LaBar. This has been another episode of On the Waterfront, sponsored by Waterfront Logistics. This time with Dan Walsh, President and CEO of Track Intermodal. And thank you again for joining us. Until next time, we'll be moving it like we own it here at Waterfront Logistics.